Hi everybody, welcome back. Thank you all for coming back and hanging out with me today, for those of you who are returning subscribers. And if you are new here, hi there, my name is JoJo. I am a family of 5 and we are focusing on paying down a $102,000 debt that we started with in February of last year. I just paid off some debt yesterday and we are now down to $45,400 and something, which is super exciting. But today's video, what I'm going to be doing is my monthly check-in for Velocity Banking. The last debt that I'm really focusing on is my student loan, and it is an amortized interest loan. And what that means is where you have a set term and a set minimum monthly payment. And so you have this amortization schedule. I think we're most familiar with that with our mortgages, but any loan that has a set minimum monthly payment and a set term, like number of years to pay it off, has an amortization schedule. And usually early in that loan, you're paying a lot of money towards interest until you reach this threshold that you've paid down enough over, a certain number of years to where it shifts now that your minimum payment is paying more towards the actual principal. What the Velocity Banking strategy does is it takes money, chunks of money at a time, to drop that principal balance and shift you more to reach that threshold sooner, so you can pay off, increase the velocity of paying down that loan and save money on interest. It's an interest saving strategy, and I have an entire series. I'll leave a link to it in the description box below the playlist if you want to see more detail about that. But today what I'm going to be doing is my accounts tracking for my accounts that are housed within our home equity line of credit to hold the principal balance down on it as long as possible. And then I have an Excel spreadsheet that tracks my interest savings on this strategy, because if I was skeptical and I wanted proof that it was working. So let me get you guys switched over to my accounts tracker sheet first and we'll get started. All right, so here we are at my accounts tracker. These are all accounts that are housed within my home equity line of credit. We had taken $20,000 from the home equity line of credit to pay down the principal balance on my student loan. I'm going to pull in my paycheck budget sheet and just kind of show you guys what that looks like as far as what we owe currently. So my student loan, I refinanced it in June of 2018 at almost $69,000. When I started our debt-free journey in February of last year, it was still in the 60,000s. So adding these two together, because they are tied together, we currently owe about $45,000 on a little over $45,000 total now. So it's been working well for us, this strategy. This is what my home equity line of credit is currently at. But the purpose of this is, this tracker is to keep track of all of these accounts, because they still serve their purposes. Like a checking still serves the same purpose as a standard checking. My sinking fund still has its same purpose. And then our savings accounts. And then this is just how I keep track of principal balance that is being paid on the home equity line of credit. Now, I did not include, since this is still for December, I did not include the amount that I paid towards principal yesterday towards this loan. So that will be during my January monthly check-in. But I'm just going to write down what we've added in total as money's been flowing in and out. What we added total was $3,472.78. Sinking funds had $2,366.21 contributed. Savings 1, I am just holding that steady at $1,000, and then savings 2 had $600 contributed to it. And then our principal that we paid in December was $3,908.04. These all added together equals $10,347.03. Now what we'll say is how much we had taken out of each of these accounts. So the checking had $8,674.25 that came out of it. We used $1,672.78 from our sinking fund, and then our savings, we of course try to not take anything from them. And our principal, that did not have anything come out of it either because of we're paying down that balance. And total money flowing was $9,132.03. So I'd accidentally swap these. Blue was supposed to go over here and green was supposed to go over here, but it's okay. So when you add, subtract, and then get the ending amount, checking was left with $1,433.85 still being housed within the HELOC, but with the same purpose as a checking account. I still have my standard checking account open. So let's see then, $3,882.46 is what we have left with sinking funds this in the month of December. Student savings 1 still had $1,000. Savings 2 is now up to $2,400. And then total paid on principal in December has been $11,283.69. And when you add all of these together, that totals $20,000. So my HELOC accrues interest based on an average daily balance. So the more days out of the month that I can hold the principal balance down, the principal being what the bank sees that they can charge interest on, then the lower the amount of interest I'm going to be charged. So you can see I obviously still owe the bank more than this. I still owe them some money, but they're not charging me any interest on anything right now because of all of these accounts are sitting in there holding that principal balance down. And I did at one point have some principal for them to charge interest on, but it was a very low amount. So what they ended up charging me interest for in December was 39 cents. And my interest that I have paid overall on the HELOC was $83.44, and my HELOC ending balance is still at $0 of what it shows to the bank as far as principal. That is the accounts tracker, so I know how much money is in each of these designated accounts. Now what I'll do is plug this information in to my Excel spreadsheet and see how much interest savings I have had for the month of December. All right, everyone, so here we are at that Excel spreadsheet document I was telling you about. And on the top table that says Snowball, this is the comparison table had I followed the standard method of doing snowball payments to my actual student loan account. And then below, the blue velocity banking table is what I'm actually doing. And the very end column right here is the percent that I'm paying in interest towards my HELOC. And then over here is the interest that I'm paying for my student loan. And then I add these two interests together, subtract it from what the predicted amount would have been had I done the snowball, and figure out my interest savings over here. And this is total overall, and this is not actually all encompassing because I stopped tracking before the total loan was even paid off. It was just a quick crunch of numbers to see if there would be any interest savings. And when I saw this as a potential, I was sold. I was like, yes, I am all in. So what we're going to be doing today is starting here with the snowball table, typing in what my actual snowball was, because I'm trying to get these to be as realistic in numbers as possible. So what I actually paid in debt for December, in addition to my normal payments, was $3,908.04. Okay, and so that corrected these numbers here. And then I'm going to come down to this HELOC percent and put in what I actually paid for interest for the HELOC, which was that 39 cents. Okay, and see if this was correct, my actual interest payment on my student loan. And it was slightly more, because again, these are just equations that I put in. I obviously don't know exactly what the lender's doing. Same with up here, it seems to be higher than my predicted values. So I want to be conservative though with these. I don't want to give falsely inflated numbers. So I'm just sticking with my calculations up here, which are the same as the ones down here, but obviously they're kind of underestimated. So what I actually paid in interest to my student loan for December was $159.60. Okay, so then when we come over here, this is where it adds up my interest savings. So let's see how much we have saved so far. All right, so since implementing this strategy in August of last year, my predicted interest savings has been $256.30, which is fantastic. For any of you who kind of had the aha moment once you wrote down all of your debts, and then if on a lot of the debt trackers, you also write down how much you pay in interest every month, it feels like a dagger, because you're already paying money to these lenders and then you're having to pay them additional money just to continue that debt with them. So it's just kind of like this double whammy that you're getting hit with. So this is like, interest is my nemesis, you guys. I loathe it. And to see that I'm saving some money, at least some money, towards interest to these lenders, makes me feel a little bit better. I'm still motivated to get this debt gone because I don't want to pay any more interest than I have to, but we do have proof of interest savings with this strategy. But that's going to wrap it up for this video for this week. I'm going to be filming another video next week. Next Friday will be my week 3 check-in for paycheck number 2. Thank you all so much for stopping by, and I hope you have a fantastic week, and I will see you next Friday.